Hello, good evening, everybody. My name is Rod Escayola, and I am your condominium lawyer with Gowling WLG, and welcome to our April episode of the Condo Adviser webinar. And at this point in my notes, it says, start improvising from this point forward, good luck. Those are my notes. So from this point forward, we're flying on instruments. So folks, this is going to be a good episode. In fact, we are going to take a deep dive on condo liens and chargebacks. And there's a lot of misconceptions out there with respect to what can be charged back, when it can be charged back, how does that work? And the landscape has changed recently-ish with the Amlani case. Now, the Amlani case is not that recent anymore, but there's still a lot of misconception, and there's some people that are just not ready to let go. And so if you Google the case, if you start reading blogs, you will get varying opinions. This team here is the team that argued the Amlani case. So we will tell you what it stands for and how it has changed to some extent a corporation's ability to charge back certain expenses. Now, to be able to demystify all of that, we went and we got fantastic speakers as usual. I'm going to start with a regular. I think she has a pass. She can show up anytime she wants at any one of our webinars. She is the most senior property manager or condominium manager in Ottawa. Josée Deslongchamps from Des Services. Hello, Josée. Welcome back.
Hi, Rod. Thanks for having me back. It's been a while. I'm glad to be here.
We can't wait to hear what you have to say and to see your notes about tonight's presentation. That's going to be fantastic. But we have for the non-Ottawa voice, I used to say the GTA voice, and somebody told me, well, that's from outside the GTA because we got somebody very special. We got Michelle Joy, and Michelle is the executive director of condo management with Wilson Blanchard. She's physically located in Hamilton, although of course WB is in the GTA and beyond that. So welcome and thanks for joining us, Michelle.
Thanks so much. I'm excited to be a part of the panel tonight.
Same here, same here. And we also went and got an auditor because sometimes the devil is in the details. And so our auditor tonight is Roger Ouseley. He says just one of the partners, but I mean, his name is the first name in the partnership. So he's with Ouseley, Hanvey, Clipsham, Deep, LLP. Thanks for joining us, Roger.
Good evening, everybody.
Good evening. And so I had my AGM yesterday, folks, at home. My own personal AGM went well. And we had the good people of Ouseley, Hanvey, Clipsham, Deep that were in attendance. And as usual, they're able to present the information in a way that even a lawyer understands it. And I mean, lawyers are not known to be good with numbers. Okay, so that's for the introductions. Of course, I forgot to change the slides to tell you who is playing with us tonight. And as usual, the chat line is open. So if you have some comments, some questions, if you want to chit chat amongst yourselves, if you want to sort of comment, by all means, use the chat, try to keep it clean. We usually try to share the chat later on, but sometimes it's not always possible. Ensure that, as Graeme said, if you want everybody to read it, make sure you put your setting in such a way that everybody can read it. If you have a question that you would like us to address, even though we often run out of time and we have to ignore them, put them instead in the Q&A, okay? And the usual housekeeping, the usual disclaimers. If you're watching this webinar, it's being broadcasted from Ontario. So whenever we refer to legislation, I should have given that to you, Graeme. You can probably do it with your eyes closed. This is out of Ontario. We're referring to Ontario legislation mainly. Keep in mind that while we do our best to provide you with accurate information, it can get stale dated. Today is April 6, 2022. And also keep in mind that the information we provide you is general in nature. It may not apply to your situation. It may not resolve your situation. So make sure that you retain and consult the experts to give you answers that work for you. Now, you may notice that it appears that I forgot to introduce our condo twins. That's because the condo twin is flying solo tonight. We only have with us tonight Graeme MacPherson, and I'm going to have the immense privilege of being the other twin, the evil twin. So Graeme,
well, there you go. I hold my good twin title still for another day.
Yeah, that's right. So thanks for being with us. David has not the month off tonight. He couldn't join us tonight, so we'll have to do without him. which means that you're going to hear more of me. Sorry. Okay, Graeme, at the risk of disappointing people, 30-second update on COVID.
Okay, I will be quick because we're not here to talk about COVID today, but it wouldn't be one of our webinars without Graeme's COVID update. This is basically just a reminder to everybody that most of the formal requirements from the provincial regulations are no longer in place as we are in the roadmap exit stage, but it still remains very, very important to see what your local municipality or your local health region is recommending. And so what we've got here in these slides, which are going to be posted, we get to that as quick as we can, are the links to some various municipalities or health regions that we recommend you looking at. And I think my COVID update encapsulated is just make sure you are aware of what your local requirements are.
Right, and you can get these updates by going to the Condo Adviser website. You press the COVID tool at the top, and then when you scroll down, you pick the slide you would like us to be in. Right now, we're the exit COVID step, and it's going to give you all the information that you need to have. But if I go back to the slide that we had a minute ago here, Graeme, I'll give you an example. Ottawa has very recently issued a strong recommendation that masks continue to be worn indoors, especially in settings where there's crowds or where social physical distancing is difficult to maintain. And so what we do know is that condo corporations have an obligation to abide by public health recommendations. And so you have this one in Ottawa, but you really need to go to each one of your own sort of public health chapter, I'll call it, and see what are their recommendations. In the Ford Nation area, I'm not going to define what that is, a lot of the public health advisors are simply telling you we're following the province. And so if you're in one of those, well, then you follow the province, it's easy. If you're somewhere that's a bit sort of more remote, like in Ottawa, you may have to adapt your policies. Okay, so that's for that. Enough time about COVID. I want to dive into the thick of it. We're going to talk about common expenses, chargebacks, and legal fees, and how you can collect those. What are the tools you have available to collect them? And we're going to talk about various sort of common expenses. Of course, there's the regular common expense, which is really the monthly condo fees, right? Those are the ones that are easy to understand, and for the most part, people are able to pay them. And if they don't pay them, there's ways of making people pay. We'll talk about that. There's also statutory chargebacks, and those are the chargebacks that are that find their basis, their authority in the Condominium Act. And so there's various sections of the Condominium Act that specifically provide that you can charge back this expense or that expense. The first one that comes to mind is the insurance deductible in certain instances. So the Act tells you that you can charge those back. And then there's what I call the declaration-based chargebacks. Those are more along the lines of if you have in your declaration a requirement to do X, Y, Z, and an owner doesn't do X, Y, Z, and there's an indemnification provision in your declaration that says you can charge it back, then you may be able to charge it back. And so that one varies from condo to condo, and that's the one that gets abused the most. And so anyways, we'll park that, we'll address that in a minute. Another important type of chargeback that is really getting everybody excited, I guess, are the legal fees. Obviously, sometimes you need to retain a lawyer to help you collect something. And sometimes that means that you need to pay your lawyer. And in a perfect scenario, you'd be able to charge back the legal fees to the owner. Like, why would the rest of the ownership have to pay for our good services when this unit is the one to blame? So those are the various types of chargebacks that we will cover today. And I just wanted to give sort of this overview. Okay, the first segment is mine. I want to talk about the regular common expenses. Under Section 84 of the Condominium Act, it provides that every owner shall contribute to the common expenses in the proportion set in the declaration. So there's really two places that you can find the ability to charge something to an owner. It's either in the Condominium Act or it's in the declaration. And Section 84, as I said, specifically provides that an owner has the obligation to pay, and it goes further. It actually provides that the owner has to pay even if, and then there's a couple of, you often hear an owner saying, for instance, well, I don't have to pay for the gym. I don't use the gym. Or why do I pay the same amount towards the elevator when I'm on the second floor? I never use the elevator. So the owners have to pay their share as set out in the declaration, even if they've waived or abandoned their rights to use common elements, and even if they have a claim against the corporation. I'm suing the corporation, you owe me $10,000 for whatever, and I'm going to sue the corporation, and so therefore I don't have to pay my condo fees until I set this off, until I get my $10,000 worth. That's not a thing. You have to pay regardless of whether you have a claim. And this other one's an interesting one. The owners have to pay their common expenses, even if the declaration or the bylaws or a rule restricts someone's ability to use a common element. And I'll tell you why I find that interesting. During this COVID time, a lot of corporations adopted a rule or a policy that would close the gym, let's say, or that would require someone who wants to use the gym to wear a mask or to show proof of vaccination. And so these rules, these policies, these bylaws were restricting an owner's ability to use a common element. And so some owners would actually push back during these COVID times, and they would say, well, wait a second, this policy, this rule, this bylaw is preventing me from using the gym or using, the pool room or whatever it is. And so, or imposes on me an obligation to show vaccination. So in essence, you're preventing me from using the common elements. I'm not going to pay for that. That is not a thing. You have to pay and fight it out later. Keep paying in time, fight it out later if required. Okay, so, and I'm almost done, like sort of the overview here, but I like this excerpt from the friend case. I mean, this excerpt exists in many, many other cases, but the reason why the Condo Act puts in place all of these mechanisms to collect, and to collect even against someone's will almost, the reason why that exists is because common expenses are the lifeblood of a condo corporation. And if a condo corporation does not have a source of revenue, well, the operations of the corporation will come to a grinding halt. And so the Condo Act is designed in such a way to safeguard and ensure the financial viability of condo corporations in a manner that balances everybody's rights and interest. Okay, so that's a quote I really like because it kind of explains to you why it is so important and why condo corporations can sometimes be so aggressive in their demands to be paid. Otherwise, if you don't pay the piper, I mean, the piper is not going to play. And another excerpt that I really like to keep in mind for tonight's discussion comes from the Amlani case, where courts recognize that the whole system is built in a way to ensure that the collectivity pays what it has to pay, and to avoid one defaulting owner imposing on all the innocent owners certain costs. So imagine this, I mean, if an owner is not following the rules, you need to hire a lawyer, you need to go to court, it's going to cost $15,000, $20,000. Why are we all paying for that when Graeme is the one who brought into the condo corporation an overweight dog? Why do we all have to pay? So the system is built in such a way that we're trying to protect the innocent owners. Okay, I think I'm turning to you for this slide, Graeme, am I right?
I think on our agenda, the next one is the overview of condo liens, but I'll do this if you want.
Yeah, I moved it around because it felt like it fit here.
So let's do it. As Rod had alluded to before, the other types of sort of quote unquote common expenses that we're going to be talking about are chargebacks. So specific chargebacks, not your usual monthly payments, but instead specific instances where the condo corporation is owed a specific amount of money, usually stemming from some sort of repair. That's the most usual cause. But that's the other item we're going to be talking about at large here tonight. And so I want to start with statutory chargebacks. If you look at Section 92 of the Condominium Act, it'll set out that there might be certain circumstances where an owner is responsible to do certain unit repairs or maintenance, or certain common element repairs or maintenance even. And section 92 sub 4 says that if an owner is required to do any of that work and they don't do so within a reasonable time, the corporation is able to go in and do that work, and they're able to charge the costs of that work back to the owner and collect it in the same way as a common expense. And so anytime that the act or the declaration says that something can be recovered in the same manner as a common expense, at that point we need to start thinking we are going to treat this in the same way as we would treat that regular first of the month payment. The other example of a statutory chargeback we've got listed here are insurance deductibles. So in the event that there is damage that takes place to a unit or common elements, and it stems from one of the units or due to the act or omission of somebody in a unit, and this is obviously going to depend on what your corporation's bylaws say in terms of whose fault it is and who has to pay. But the Act tells us that in the absence of such a bylaw, if there's been an act or omission of an owner that causes that sort of damage, then the corporation's insurance deductible amount can be charged back to that owner, and again, collected in the same way as a common expense.
Right,
And then
that's section 105. And Graeme, I'm sorry,
Yes.
you did send me an updated slide, and we're now looking at the prior version of the slide. But I'll put the right slide when the time comes to be posted. But so that's section 105, and then the other one was legal fees.
Yeah, and so we're going to get a little more into this in greater detail later. But there's kind of two types of legal fees I want everyone to keep in mind. Legal fees related to enforcing compliance. So, if you've got rules that say no smoking or no Airbnb, for example, and the condo has to hire its lawyer to enforce that rule, like Rod said, it doesn't seem fair that everyone should have to pay for that, but there is a special way that these types of legal fees get treated, and we're going to be talking about that in a little bit greater depth. And then the other types of legal fees are legal fees related to collection of common expenses. So, for example, let's say an owner hasn't been paying their monthly common expenses and the condo needs to get a lawyer to come help out and collect that. Those lawyers' fees are much more easily collectible, I'll say for now, as common expenses.
Right, so two categories: legal fees incurred to collect common expenses and legal fees incurred to ensure compliance with the rule. And we're going to drill down in a couple of minutes. Okay.
Yeah, and then when you're not looking at the Act, the next place you can look to see if can we charge this back as a common expense is the declaration. And so the most declarations have what's called an indemnification provision, which is it's a statement that basically says any costs that the corporation incurs as a result of the acts or omissions of an owner or someone in their unit can be charged back to that owner's unit in the same way as a common expense. And it's usually a pretty big blanket statement, and how far you can enforce it sort of depends situation to situation. But then declarations often have kind of smaller, much more specific and tailored provisions with respect to indemnification for very specific things. So it might be that, if the declaration says you have to maintain your unit at a certain temperature and you fail to do so, any costs that the corporation incurs as a result of that are going to be charged back as a common expense. And I think generally speaking, the more specific and the more drilled down it is, the probably easier it is to enforce, whereas the more broad statements, you're kind of rolling the dice a little bit. The other place where you can find if something is a common expense or chargeable in the same way as a common expense is to look at what is usually classified as Schedule E in a declaration. Sometimes the letter changes, but it's a list where it will list out everything that makes up the common expenses.
Right.
And then the last item here are fines and administrative fees and whether these can be charged back as a common expense. And I think a lot of corporations tend to do this. Like if there's an NSF fee for a missed payment or anything like that. At the end of the day, what I'll say is that, every situation is going to be based on the specific facts of that situation, but you need to make sure if you're going to try and charge something back as a common expense that you actually have the authority to do so in your governing documents.
Right, and the takeaway I think for fines is, just once and for all, you cannot fine owners. You cannot fine owners. And if you're going to have an administrative fee, sometimes an administrative fee is a disguised fine. You're not making any progress here. But if the admin fee is an actual cost to the corporation, if there's a cost, then we're talking. Then we should have a look at that. So basically what we've done up to this point, we've talked about the general sort of common expenses and how they work and why they work the way they do. Graeme covered the chargebacks, where you can find these various chargeback, if it's statutory based, if it's declaration based. And now you're probably wondering, okay, so let's apply this knowledge here. Yes, what do we do if an owner doesn't pay one of those, whether it's a common expense or whether it's a chargeback? So the owner is failing to meet their obligation to pay common expenses. What mechanisms does a corporation have to force that collection, other than cajoling? And where's the stick, Graeme?
So the stick is the condominium lien, and as we'll discover, it's quite a powerful tool. So what we see here is that we've written a condominium lien is a security interest registered on a unit's title that secures the condo's ability to collect outstanding common expenses. And what that means in practice is that if there is a lien registered against your condo unit, it will show up as a statement on the title of your unit that, if you want to sell your unit, the buyer is going to look up your unit's title, and they'll see there that there's a statement that says, oh, geez, Graeme actually has a condo lien registered. I guess this unit owes money. And so that's going to likely interfere with your ability to sell the unit, or at least your ability to collect all the proceeds of the sale. That's what makes it a powerful tool. For one, that it's registered on the title of your unit. But I think what makes it even more powerful is that it can be collected and acted upon in the same way as a mortgage. And that's a fancy way of saying that just like your mortgagee, if you don't make the payment of the condominium lien within a reasonable amount of time, the condo corporation can in fact sell your unit and use the proceeds of that sale to make itself whole again. So it is quite a powerful tool, and it can be registered without you having to consent to it, and in fact, despite your protests against it. So the question then becomes, okay, well, what does this very powerful tool cover? And it sort of covers three main things. Well, I guess four, but I'll go into them. It covers the common expenses that you owe which haven't expired, and I'm going to talk about that in just a second. It covers any future defaults of payment after the lien is registered, and it covers interest, and it covers legal fees. But again, we're going to have a whole discussion on legal fees in a bit. Now, I did mention that what it covers is common expenses owing that haven't expired yet. And what the Act tells us is that a lien expires 3 months after the default which gave rise to the lien. And so we're going to be talking about a case that goes into this in a little bit more detail. But in general, the rule is that once the amount is owing and not paid, we're considering the timer starting there. And if 3 months go by and it's not been paid and no lien's been registered, the corporation may have lost its right to lien for that amount. Now, does that mean you still don't owe that to the condo? No. And does that mean it can't go on your status certificate? No. You still might owe that money, but it just wouldn't be covered by the lien.
Right, and a lot, folks, is going to turn on when that default first occurred. A lot's going to turn on that. And the default is when the sum of money was owed and payable and failed to get paid. Now, if you're dealing with regular monthly fees, and Michelle's going to talk about that in a couple of seconds, but if you deal with regular monthly fee, it's the first of the month. So it's easy. If somebody skips the first of the month, the window of opportunity opens up right there. 3 months, you got to register a lien. But what do we do if you're dealing with a chargeback? And I think Josée is going to talk about how does she sort of keep track of that 3 months for the chargeback. And in a minute, we're going to talk about that case where a corporation took more than a year to advise an owner that they had to pay the deductible amount. And so how does that work? Okay, back to you, Graeme.
Just the last little bit here is that in order to register a lien, because it is such a powerful tool, you do need to follow a specific procedure, which requires you to send written notice of the lien to the owner at the address for service that they have registered with the condominium. And so you need to make sure that that is done at least 10 days before the lien is registered. And then once a lien is registered, assuming you don't get payment, you need to send notice of that registration to any encumbrancer on the unit. And when I say encumbrancer, the most common example is if the unit has a mortgage, but there are cases out there that maybe sort of expand on what this definition could mean. And this is my long-winded way of saying it. It may not be as simple as just the mortgagee. And so it's important if you find yourself as a board member or as a property manager in this circumstance where you're going to be sending out a notice of lien, to probably involve your legal counsel just so you can make sure everyone is getting notice who needs to.
Right. And that's the important part. A lot of people think, well, I'm just going to send a letter as a notice of lien, or I'm just going to send an email as a notice of lien. There's all sorts of requirements. And some of them are fatal if you don't meet them. So 3 months to register your lien, that may be fatal. Before you register the lien, you have to give at least 10 days notice. So you can't just like contact your legal counsel on the 29th of the month. So the 10-day before notice is important, and that notice has to meet all of the requirements under the Act and must be provided to the right people. And in a minute, we're going to talk about the Ching case, I think, where notice was not given to the non-registered owner who was the spouse of the registered owner. She didn't even live there anymore, but she was the spouse of the registered owner. She lived off-site and she was not advised of the lien, and she was able to punt the lien altogether, right? So I mean, that's don't cheap out on the process, because it may be fatal and you may lose the ability to collect. Okay, now all my guests are wondering, why have we been called here? I mean, it's been 30 minutes and we haven't said a word yet. This is where we turn to them. We just needed to set the table.
I'm going on mute.
Okay, perfect. So Michelle, I'm going to turn to you first. And I'd like you to help us understand, the colors may have changed, so you may not recognize your own colors, but
Okay.
and so the process to lien a unit, what's the typical process that you follow at the Wilson Blanchard Management?
Sure. Yeah, happy to walk everybody through that. I'm going to hit on some of the topics or points that Graeme kind of reinforced some of those points that he hit on as well. So as we stated, payment of common expenses should always be due on the first of the month. That's, I think, standard across the board. Everybody has their common expenses monthly fees due on the first of the month. And that's incredibly helpful because when we're doing the 90-day or 3-month calculation, when you start at the beginning of the month, it's easy to hit to calculate that timeline. So once you have owners that go into arrears, as a courtesy, try and send your owners an arrears notice of some sort. Over the years, we've been, WB has made an effort to go paperless. So we do have a policy that everybody gets an emailed arrears notice, just as we're doing less and less paper and mail these days. We do have, special exceptions for one-offs like chargebacks, special assessments that people aren't used to having to pay on a regular basis. So always send a courtesy and arrears notice. We send it for every month. We do arrears at the beginning of the month. So if you default 1 month, you'll get an arrears notice until that amount is cleared. A big tip that I have is as a manager, the board gets those financial statements on a monthly basis, and they are responsible for reviewing and understanding them. But as a manager, we also have a responsibility to ensure that our boards know what they're looking at. Not everybody's a chartered accountant and understands things well. So ensure you review your arrears monthly with the board, keep them up to date, and let them know when a unit may be in a lien position. Boards don't like when they get into the elevator with someone who's just received a notice of lien in the mail, and maybe they didn't know that the notice of lien was going out, and now they're stuck riding to the 16th floor being yelled at about this legal letter and all the extra fees they just got. So let your boards know when someone's going to be in a lien position so they can prepare for maybe that unpleasant situation that may arise. So yeah, that's the beginning steps. And then once we get closer, let's say we've passed 60 days in arrears and we're approaching that 90-day period where you need to consider doing a lien. Before you proceed with your lien, ensure that the amount is actually collectible, so you can actually lien for this. check with the corporation's lawyer. We've talked about all the different, Graeme talked about the different items that can be processed as a lien. So make sure before you follow through with that, that it actually can be liened, because there's nothing worse than, you know, having to write off legal charges or reimburse an owner for something that shouldn't have gone through in the first place. One tip I have been giving some boards is be proactive. You don't want to be in the midst of a situation and finding out that you can't proceed with a lien when maybe you're trying to collect a large sum of money. So be proactive, approach the corporation's lawyer, have them look at your declaration, your bylaws if they apply, and have them give you a summary, a legal opinion on everything you can lien on, and maybe some areas that your corporation documents may be lacking. And that way you have a blueprint of how to address your collections every time you need to deal with it. So what's the process once we hit that deadline and someone does have to go to a lien? So like we said, you want to give time because there's a notice of lien, and then you need at least 10 days for that owner to receive it and have the ability to pay. But you don't want to leave it to the last minute, because if it does need to be a registered lien, you want to give your lawyer time to prepare that paperwork and register it before the 90th day. So our timeline is approximately, you want to be aware of what arrears need to go notice of lien by the 75th day. And like we discussed, involve legal counsel. Title search is very important. You want to make sure that it's going to the mortgagee. A lot of the times they do step in and clear those arrears before the lien even gets registered on behalf of the owner if the owner can't clear it. So you can avoid getting into the further legal issues a lot of the times, because the bank will come in and clear those amounts. The lien has to be registered by the 90th day. So we use 90 days, assuming that every month is 30 days. Obviously, depending on the month, it could be more than 90 days, but it needs to be registered by the end of the 3rd month. So again, you want to make sure that you're giving the lawyer time to, if they don't collect it when the notice of lien is sent out, give them a couple days so they have time to prepare the paperwork and register the lien. Don't leave it to the 30th or the 31st of the month. Just, be courteous. So usually in our office, I would say our accounting department is looking at their arrears at the 10th business day of the month to start preparing. And again, it's going to depend on stat holidays and weekends, but about the 10th business day, they're looking at who they need to potentially prepare notice of liens for, so that timeline is followed. And then lastly, I just had a couple little management tips to hit on. Once a lien goes to the lawyer, so once that lien is registered, owners must deal directly with them to discharge the lien. So if an owner calls you upset, they want to set up a payment plan, they want to discuss the charges, direct them to the lawyer handling the lien. And we have a policy in our office where we don't collect anything further. So once it goes to the lawyer, we won't collect any further payment from you. You have to discharge that lien with the lawyer before you can resume, pre-authorized payment with the management company.
And one of the reasons, Michelle, for that is just to keep everything sort of clear, because otherwise the signals may get crossed, and the owner thinks that they're paying something, and they think that it's resolving the lien, and maybe they'll call the manager, and the manager will say, yeah, it's only $550 that you need to pay, but in the meantime, there's some legal fees that were added, there's some interest that must be calculated. So once somebody is in default, once it's in the hands of the lawyer, it's best to just shift it all to one central person, the lawyer's office, to deal with the arrears, the chargebacks, the interest, and so on and so forth.
Agree. Yeah. 2 other quick tips. One, collecting common expenses. Management can apply fees paid to the oldest amount. So the downside of this is that you kind of, for certain people who are maybe always in arrears, you're kind of always saving them from that lien position. So use your discretion. And I say, unless otherwise directed, if someone sends you a check and says April 2022 fees, it has to be applied to the April 2022 fees. So that's what unless otherwise directed means. But if it's just pre-authorized, just apply it to the latest amount. And lastly, clearly communicate your arrears and lien policies to your owners with each budget package, newsletters, AGMs. Communication is the key to successful community. And so I don't think you can ever over communicate. So just make sure that owners are aware of what your collections policy and how liens are handled if they do get themselves into that sort of situation.
Okay.
That's all my tips.
Hey, that's wonderful. Thank you so much. Let me unpack just a couple of things that I want to flag. So Michelle spoke of 90 days. the deadline is really 3 months. That's what you have to keep in mind. Now, I did a quick calculation to see if February would bring us below 90 days, and it's exactly 90 days. So in most cases, maybe 90 days and 3 months is one and the same, but it's really a 3 months deadline. So if it's on the 4th of August, that's the default, then you just count 3 months from that period of time. So I just wanted to clarify that. Something else that Michelle said that's very, and Graeme said it as well, I think, in many cases, registering a lien will trigger the bank to come forward and pay the arrears because they want to keep their priority. So that is why this is a very powerful tool. And I had one last thing to add, something you said. Well, it'll come back. Okay, perfect. Wonderful. Thank you, Michelle. I'm now going to turn, well, Roger, just hold your seat just a second. I'm going to do the same exercise with Josée first. So Michelle spoke of the monthly arrears, right? How she collects the monthly arrears. Josée, any differences when we're dealing with a chargeback? And so obviously the chargeback is not triggered by the first of the month necessarily. So any sort of precautions to keep on top of leaning chargebacks?
Absolutely. Well, the process for chargebacks is similar, but I see that I would say that there are 3 different scenarios generally where you're going to contemplate a chargeback. Some of them are planned, right? There's planned maintenance in every unit. The condominium corporation has agreed to buy in bulk a bunch of filters or a bunch of batteries or chimney cleaning services, that kind of stuff. And they know in advance that they've received a quote, it's going to be this much per unit. So you've broken it down, you communicate with your owners, they have signed some kind of document, a note that says, yes, I do want to opt into this. Yes, I will agree to pay. Yes, I allow you to take the money out of my condominium account, my bank account. So that's one type of planned maintenance. And despite the fact that you may have an agreement and it'll tick in that box that says, yes, I will pay, sometimes it occurs that some owners decide that they're not going to cooperate. Typically, when we do chargebacks at Des Services, either planned or otherwise, we make the date payable the first day of the following month, much for the same reason. It simplifies the process of trying to figure out that 90-day period or that 3-month period. Otherwise, you end up with a bunch of different dates and reminders all over your calendar trying to tell you who owes what when and how far are they into their debt. So that's the first kind of chargeback that you can expect. Those are easier to handle, right? This is the kind of service that people are asking for. They want it. You've issued an invoice and away you go. There's also, of course, the kind of chargeback that comes as a result of damages. A lesser pleasant thing to deal with, but let's imagine for a moment that someone's crashed into the garage door. They took it off the tracks. There's a little bit of damage. There's going to be a service call. So always with chargebacks, it's about communication, always. So you communicate with the owner to find out if they're okay to start off with and commiserate about the miserable thing that it just happened. They're shaken up, but you're going to also then follow up with an incident report likely, and then the service report from the contractor who came in, the invoice for the contractor who came in for the emergency work, who probably has now told you it's going to be $500 to do a permanent repair on the door. So in your communications with these people, try to always let them know, here's how much it's cost so far, here's how much is coming, and always try to open the dialogue and have them confirm with you that they understand that they're going to be responsible for this payment. When all the invoices come in, again, a transmittal letter goes out with an invoice saying, here are the fees that we've incurred. Here are the charges that the condominium corporation has paid on your behalf, and your invoice is due on the first day of the next month, assuming that the first day of the next month it isn't in a day or two. So be somewhat reasonable there. If this event is happening before the 15th of the month, typically we give them till the first of the month, next month to pay. If it happens towards the end, then we sometimes bump it to the first of the following month. It's always about communication and about keeping everything in writing if possible. It's okay to have that conversation, to commiserate and to give information, but always to follow up with a notice in your own file, something in writing, because you're going to want an audit trail, right? Your auditor is going to want to know if you fail to secure these payments. They're going to want to know that you tried to and how you tried, and how far you're into the process. Your lawyer certainly is going to know. If you get yourself into a lien position, you're going to have to turn over this file to a lawyer and say, listen, I've made attempts of payment as many times at these dates. Here's where we're at.
Right, because and that is crucially important. That's the first thing I always ask when a chargeback lien file comes my way. Okay, so how often have we asked for the payment? When have we asked for the payment? What proof do we have of that? Uh, are we using an email address that hasn't been responded to in forever? Like, do we even have the right email address at this point in time? And so that's crucially important. Anything else, Josée, before I finally get to Roger?
No, I think we should give it to Roger.
Okay, perfect. So Roger, I feel bad because you've been waiting in the wings, and usually we call you in at the AGM. You show up just for your moment, and then you go. And so I apologize for that you've been waiting in the wings for so long. But what I wanted to hear from you, Roger, is any sort of things to keep in mind when it comes time to reporting these chargeback or these liens. And I'm specifically concerned about situations where between the default and the collection, there may be a fiscal year or 2 fiscal years. And so how does that appear in the in our audited statements?
Well, liens typically secure a receivable. So you'll see it on the balance sheet in accounts receivable. And we find that when receivables are secured by a lien, we get comfort from that there's we're reasonably assured that collection will be achieved. We get quite nervous when we come in and we see a bunch of balances in the 90-day column, and we would always ask the status of those. In most cases, they have been liened, and in some cases, managers take a laissez-faire attitude towards the receivables. We would not expect condominium corporations to show bad debts. However, in a lot of cases, we are unsatisfied that collection is reasonably assured, so we would insist upon setting up an allowance for doubtful accounts, which hopefully gets reversed the following year when we're proved wrong and collection is obtained. That's about it, Rod.
Okay, so and I got 2 more questions, if I may, and I'm going to see if I can do this discreetly, but I may not be able to do discreetly, so I won't show that. I didn't have time to redact it, but I'm going to ask you 2 more questions. So let's assume that there's a unit that's not paying their common expenses because they're in arrears and they're missing an action. And let's assume, just to make round numbers, that their contribution towards the common expenses is $5,000. When you look at in the audited statement, you look at the operating, the statement of general funds or general operation funds, would we see, I guess, the budgeted amount? We were supposed to collect $500,000 in common expenses this year, but we're missing 5. So would we see that the distinction, the difference between what was budgeted, full collection of all fees from everybody, versus what we collected when Susan didn't pay her share? Would we see a delta there?
In the statement of operations, you will see the full condominium fees for the full year. The uncollected portion will be on the balance sheet or statement of financial position in accounts receivable.
Mm-hmm. Okay. And another question that we often get is this. Now think of chargebacks. Let's assume that this year we budgeted $30,000 for plumbing expenses, generally speaking. But let's assume that there's a specific incident that took place and there's another $10,000 of expenses that was incurred by the corporation, but was charged back to the owners. So our budget was $30,000 for plumbing. In reality, the corporation paid $40,000, but was able to collect 10 from the one owner. What's the amount that would appear in that audited statement? Would we show that the corporation in totality had to cut checks for $40,000? Or since we were able to recover from an owner, do we just show the $30,000 that the corporation in fact was responsible for?
In the statement of operations, you typically just see the 30,000, and the 10,000, if it's uncollected, would be on the balance sheet or statement of financial position. In the cash flow statement, you may see the 40,000, but in the statement of operations, you would typically see the 30,000. Some managers are limited by their accounting system, and we see them showing the 40,000 as an expense and the 10,000 as a revenue. we would typically look to see the 30,000 as the expense.
Right. So you would typically focus on the actual expense that the corporation is responsible for. The fact that there was a cost neutral exercise in the background where the corporation paid for something, then recovered from someone, that would typically not appear in the statement of operations.
That is correct.
Okay. Anything else? Any sort of words of wisdom, Roger, or something else to keep in mind when we're dealing with chargebacks or liens? Any sort of problems that you've encountered?
I just, the only problem I think we find is where managers do not take the steps to put a lien in place, and they end up with a receivable, and hopefully that would be collected, but sometimes it's not.
Okay, perfect. Well, you're welcome to stick around, Rogers, or you're welcome to go as well. It's really up to you. But that was the section that I needed your light on, and so thanks for that. And again, stick around if you want. But if you have to go, because I know you probably have 2 or 3 AGMs lined up for tonight, it's really up to you.
I'll stick around and learn from you. Thank you.
Oh, perfect. Thanks so much. And folks, if you have questions for Rogers, put them in the Q&A. I see that Graeme has cleaned the Q&A. I don't know how you managed that.
It was a whirlwind of typing. My keyboard is on fire.
Well done. Okay, so there's a couple of tools that we haven't touched upon to ensure collection. So of course we have the lien. We've talked about that. Then we're going to talk about the power of sale in a minute. But there's 2 more, Graeme, that I unfortunately did not make the slide deck, and it's the ability to collect rent, and it's the loss of a right to vote. Do you want to tackle these, Graeme? And we'll add a slide later on.
Yeah,
so,
those are 2 really powerful extra kind of tools that come with the lien. It really is a big deal to have one registered, because in addition to the consequences I referred to earlier, one other one that Rod just referred to is if a unit has a lien on it and there is a tenant at that unit, the corporation can write to that tenant and say that, you know, a lien's been registered in the amount of X. So from now on, until the lien is paid off, you are required to make rent payments directly to the condo to help pay down that debt. And you no longer make your rent payments to your landlord, the owner of the unit. And that's something that, again, as you're probably seeing a theme here, can be done without the owner's permission. So that's one of the other very powerful tools. And then the other item that Rod just referred to is that if a lien's been registered on your unit, you're unable to vote at the AGM, and so, or at any owner's meeting. And so that generally puts you in a position as an owner where, you know, you're not able to take part in really a meaningful way in the discourse or the democratic process. And so it's going to be in your interest to make sure, if you can, that you can pay the lien off.
Right. And in fact, the loss of the right to vote is not triggered by the lien, it's triggered by the arrears, in fact. So if you've been in arrears for 30 days or more, then you can attend as an owner. You can attend the meeting, but you won't be able to vote. And in fact, you can't even sign a requisition for a meeting because you've lost your voice. If you want to have a voice, you have to put your money where your mouth is. You have to pay your common expense and then fight later. Pay and fight later. Well, don't fight at all, but I mean, that's okay. In about 29 seconds, the power of sale process, Graeme.
So the power of sale process is, in my view, one of the items of last resort in a lien. Ideally, if a lien gets registered, nobody wants to have to sell someone's unit out from under them. And so normally, you know, we like to, normally either the mortgagee will step in and pay it, or the corporation will enter into a payment plan on reasonable terms so that the owner can pay back the amounts owing at a rate that makes sense. However, if the lien goes unpaid long enough, the corporation may want to consider taking that drastic step. And so what that essentially means is that the corporation, through a rather long process, which I don't think we're going to get into here, suffice it to say, it involves numerous steps and the court, and is kind of long and arduous. The corporation can obtain an order giving it vacant possession of the unit, giving the corporation the power to go into the unit and prepare it for sale, eventually sell it, and recoup the funds required to pay for its legal fees and the common expenses owing, and then give the whatever is remaining back to that owner.
Right. This is not going to be done overnight. And as Graeme said, it's usually a last resort kind of tool. But at one point, you have to sell. And sometimes it's the only way to recover what's owed to you. And then you get a new owner in, and hopefully that new owner will be more diligent in paying their condo fees. So I want to talk about the Amlani case here for a second, because that's the one that sort of spun everything on its head. And the Amlani case is you're at the intersection of the collection process for arrears under Section 85 and the compliance process when you want somebody to abide by certain rules. That's under 134. And so the facts of the case are like this. Mr. Amlani, who was a smoker in a smoking building where smoking was allowed, was smoking. Some neighbors complained. There may have been some seepage, whatever it was. And so the corporation sent a legal letter, as you folks call it sometimes, and said, okay, well, you got to stop smoking because it's causing a nuisance. And the letter came with a bill and said basically something, I'm going by memory now, but because we had to get involved, it's going to cost you $600. This is the cost of the compliance letter. And Mr. Amlani didn't pay that letter, and he didn't have to pay for that letter. And he tried to enter into discussions with the corporation to try to sort of reach a resolution on the very issue, which was the smoking issue. And then that compliance letter turned into another one and another one. And then before you knew it, the legal fees were at $25,000. And at that point, we still didn't know if Mr. Amlani was smoking, if his smoke was disturbing the neighbors, if he was in breach of any rules. But basically, and this was done and is unfortunately done by certain condo corporations and by certain lawyers. What was happening there is that they were shifting the debate from a compliance debate. Are you smoking? Is that bugging someone? Is that in breach of something? Is this causing nuisance? They had shifted it from that to, oh my goodness, you haven't paid a common expense, the legal letter that we sent you. And now we're going to lien it, and we're going to lien your unit, and now we're going to sell your unit. And in that case, despite the fact that Mr. Amlani had moved out and was temporarily and was no longer smoking in there, the corporation was moving towards the sale of the unit. And to this day, nobody had ruled on whether or not the smoking was causing any form of nuisance. That's the old days. Some corporations used to use collection to bully an owner into compliance. Now, in the Amlani case, the judge looked at that and said, listen, there's two separate mechanisms. One of them is the collection mechanism under Section 85. If someone is in arrears of actual common expenses, you can lien. You have 30 days to, you have 3 months to do it, and the lien will cover the legal fees. And so do rest assured, folks at home, that if you are liening and if you're collecting or attempting to collect common expenses, the legal fees will be covered, will be captured by the lien, and you'll be able to recover that. And so that's under Section 85. But the judge says, well, but in this case, this is really not about failure to pay common expenses. This is about an alleged failure to abide by the rules. Were you smoking? Were you smoking too much? And so on and so forth. And so in that case, the judge said, we're falling under Section 134. And under Section 134, to be able to recover legal fees or cost or expenses, you first need to be able to obtain an award for damages. You first need a judge to agree with you that there's a breach to the rules, or there's a breach to the bylaw, there's a breach to something. And so the Amlani case really sort of distinguishes the kinds of chargeback and the mechanisms that exist to collect these chargeback. Now, there's a raging debate out there as to what Amlani meant. For the purists, the ones who read Amlani in the strictest term, they say, okay, well, you cannot charge your legal fees in a compliance matter unless you have an order. So whenever you send a letter, your dog is overweight, or you're sending a letter, you're not supposed to smoke in the lobby, or if you're sending any letter that pertains to compliance and rules, the purists will tell you, you can't charge your legal fees. The traditionalists will tell you, well, no, Amlani failed because of the very weak indemnification provision. And so if you have a strong indemnification provision that says we can charge back anything we want to charge back any time of the week, just because we can, it's in the declaration. And if you breach any of our rules, we will charge back. And so the traditionalists tell us that, well, if you have such a strong indemnification provision, you're good to go. The takeaway, I think, for us will be this: charging back legal fees in the context of a breach to a rule. These kinds of legal fees are no longer a slam dunk, and they no longer are guaranteed. And you can no longer use legal fees to bully an owner into submissions, into compliance. Having said that, if your legal fees, and the last thing I'm going to say is this, is that if I'm sending you a demand letter that says you can't smoke in the lobby, and you comply, and that's the end of the problem, in many cases, the cost of my letter may just have been the cost of doing business. If you've secured compliance, you may just want to move on. And like everybody else that hires a lawyer, you got to pay for the services. Now, if you don't secure compliance, that's a different story. And then you can go and get the order, and then you can go and collect both the legal fees and you get compliance and legal fees and cost and interest and all of that good stuff. So all this to say, and I think that's the takeaway here, that it's no longer, you have to walk in this with your eyes wide open. If we're going to retain a lawyer to send a demand letter, let's not do it on a petty, unimportant element, because we may no longer be able to recover the fees as we used to. So that's kind of the Amlani case. We're kind of running out of time to, because I, again, overpacked the agenda, and we're running out of time to talk about the O'Regan case. But what's interesting about the O'Regan case was that this was a statutory chargeback. We were seeking to collect the
Insurance deductible.
The insurance deductible, exactly. And so in that case, we fell under 85, not under 134. Anyways, so folks, it's 6 o'clock. We're running out of time. And it was a very rapid fire of information. Hopefully it was useful. I'm going to go around the table to thank our speakers. Is there anything that we need to add, Graeme? Is there something we forgot?
I mean, we didn't get to everything we had planned. You'll see when these get put online that there's some more slides. But I think we got the main points for what you need to know about the liens, and everything else was just kind of going to be extra icing on the cake. And that can be for the real condo geeks who download the presentation.
Right, so the presentation will be uploaded on our website. And for instance, you'll see a section where we talk about the kind of legal fees you can collect in small claims, the kind of legal fees you can collect at the Superior Court of Justice, the kind of legal fees you can collect at the tribunal. But that's going to be for another day. Thank you so much, Graeme. Josée Deslongchamps of Des Services, one of my favorite condo manager in Ottawa, maybe the favorite, but don't tell anybody else. Thanks so much for joining, Josée.
Happy to be here. Parting words, always with me: be kind, be fair, act in good faith, negotiate in good faith, make sure everyone's on the same page, keep good records, get it in writing.
Thank you so much. Michelle Joy of Wilson Blanchard. Michelle, this is your first time here, but we usually ask for words of wisdom or parting words at the end. So you're in the hot seat. Any sort of parting words for people with respect to liening and chargebacks?
Well, I mean, I don't know how to follow José's fantastic parting words. You know what? Communicate. Be transparent. Like I said during my little bit, I think communication is the key to a successful community and relationship with your board's management and owners. So implement it in every aspect, including liens and chargebacks.
Wonderful. Thank you so very much, Michelle. Roger, Ouseley, Hanvey, Clipsham, Deep. Thank you so much for having shed some light on the numbers and how we crunch them. And thanks for taking the time to join us tonight. Any parting words, Roger, before we go?
I'm happy to have been here, and just stay safe, everybody.
Yes, stay safe. And we've been, for what it's worth, at the Garden, we've been with Ouseley, Hanvey, Clipsham, Deep for forever, for as long as I remember. And so they're dear to my heart because they are able to explain numbers in a way that I can't do it. Okay, so folks, next webinar is on May 4th. There's 2 episodes left to the season, May 4th and, oh, May the 4th, nice. Or
It's Star
June.
Wars Day.
Yeah, it's going to be also in June. But so for now, the next one is on May 4th. The information will be posted on condoadviser.ca. You will need to register again. And to register, you need to click on the webinar tab. There'll be a way for you to register. And the other thing I want to say is that this webinar and the presentation will be posted, but just give me at least until Monday. Don't ask me tomorrow when it's going to be posted. It's going to be posted maybe on Monday, and you'll be able to access it by clicking on the webinar here. My parting words, folks, we're not out of the woods yet. We're entering wave 6. There's a lot of emotions about masks and distancing and all of that. Just be kind to one another. I mean, we had a big discussion yesterday at my AGM about how you can ensure that people are comfortable. Not everybody's comfortable in the elevator with people that don't have masks. So let's not make the debate about, wearing mask or not wearing mask. Let's make that debate about caring for one another. Let's make that debate about being comfortable with our neighbors, being courteous to our neighbors. Before entering an elevator, I always ask, do you mind if I ride with you? Being the president of the corporation, often I get a no, don't ride with me, but that's a different story. It's got nothing to do with the mask. So folks, let's be patient with each other. We're almost out of the woods, but not quite yet. Thank you so much. We have gone over time by 4 minutes. I don't take your time for granted. I love doing these. I hope you found it useful, and we will see you on May the 4th. Take care, everybody.